Hi, welcome to the latest episode of Manager Mix, this episode focusing on alternatives. I'm your host Laura Dew, editor of Money Management, and with me today is Haley Devine, head of wealth management at MaxCap Group. Thanks for coming on today, Haley.
Thanks for having me, Laura. It's lovely to be here.
So today we're going to be talking all about commercial real estate. And when you look at what's happening today, you've got sort of market volatility, you've got geopolitical tensions, but we can see that Australia is known as an island of stability. How do you see that playing out in the commercial real estate space?
It's definitely true that we have a lot of volatility and global disruption going on at the moment. So we have wars, we have geopolitical tensions, we have global trade imbalances and tariffs. But Australia throughout all of this is faring very well. It's not that Australia is immune to these global disruptions, but more that by the time they reach Australia, they're a little bit subdued, and therefore Australia has performed strongly throughout this period. Hence, it has the title of the island of stability. This has very much been helped or underpinned by lower rates too. So the rate cycle in Australia has been really supportive, particularly for commercial real estate debt. So we're in this almost Goldilocks scenario where rates are attractive enough for lenders to lend, but they're also affordable enough for borrowers to borrow. So we're seeing feasibility of projects stack up and therefore more activity taking place.
And what are some of the biggest challenges in these markets right now? Where are you seeing the opportunities for commercial real estate developers and for investors?
Well, Laura, hopefully the worst challenges are now behind us. So commercial real estate space and construction more generally had a really rough time coming out of COVID, that post-COVID hangover. So if we look back, there was supply chain disruption, there was rampant cost escalation for building materials, there was strong increases in wages and labour inputs, and all of this at the same time coupled with steep rate increases. So it made it a really challenging and difficult environment for commercial real estate broadly. If we fast forward a few more years to now, we've seen the rate cycle ease off, the lending environment is more supportive, and we're starting to see more activity. So we're really optimistic about what's ahead for the rest of 25 and 26 and see that those worst challenges of sort of post-COVID, 2022 are hopefully well behind us.
How are you seeing commercial real estate markets in Australia right now? You've got commercial, you've got residential, you've got retail, you've got offices. Where's looking best right now?
There's certainly a broadening set of opportunities for us at the moment. A strong call out would be the residential space. So there are a lot of thematics supporting residential at the moment. We have a low undersupply of housing, we have low rental availability, and this is coupled with strong net migration. So there is a well-documented shortage of housing in Australia. So that's a strong thematic for us at the moment. And if we look geographically, particularly in markets such as Brisbane and Perth, we're really seeing this play out. Even my hometown of Melbourne, which has been somewhat of a laggard, is now starting to show some pricing recovery and some green shoots. So residential or beds is a really strong play for us. And there's a number of subsectors within that. So we have the student living, there's strong appetite from downsizers, there's always first home buyers, buy to sell, buy to rent. There's a lot going on there in really positive that really support the residential market. Even within office, which has been somewhat of a laggard the last few years, we're starting to see recovery, a bit more geographically diverse in that Sydney and Brisbane's probably a lot stronger than Melbourne, who still loves some work from home. So there's definitely some geographic divergence there, but even office is seeing a recovery. Another thematic that we're seeing play out in commercial real estate opportunities is industrials. So we're all well aware of the AI boom, and we're seeing that boom play out on the listed share markets, particularly in the US. But that also translates to commercial real estate as well, as there's a huge demand for data centers. So that would be the sheds. So beds and sheds are two of our really strong plays at the moment in the commercial real estate space.
Yeah, great. That's a good phrase there, beds and sheds. So I wasn't aware that commercial real estate usually held residential property. So
it's a good question. We do get asked that a lot, but it wouldn't refer to sort of houses or single dwellings, but we're more looking at sort of apartment blocks or townhouse complex or even land subdivision. So that space is more the commercial space that we play in.
So we've seen a real proliferation of new entrants coming into the private credit market. That's been very popular lately. And some of those might be newer entrants who haven't got that track record in the space. What would be something that investors should look for when they're considering a private credit manager?
It's a really great question, Laura, and really topical at the moment because there are a lot of private credit funds now available in Australia. So some of the key things I would look for in a manager would be someone who's managed institutional capital before. I think if you can get through the due diligence process of a large Australian super fund, then you're really well credentialed. Another thing you should look for is scale. Scale is really important in this space because a large, well-diversified portfolio with a large number of loans is a really good defense mechanism. A large, well-resourced team is really important as well. And in this space, I would also look for a workout team.
Okay, what's a workout team? What would be their role?
So we don't often like to think about loans going wrong, but they do from time to time. So we need a team of professionals to step in and manage that loan to its conclusion. So an example would be a team of construction risk experts. And that's a really strong differentiator to have a manager that has those in-house expertise that can manage loans through any hurdles or bumps along the way. Another thing I would look for would be transparency. Transparency is very topical in this space. You would like to know what your manager does with those lucrative upfront fees, whether they're splitting them or passing them through to the fund. And lastly, I think alignment is really important. So does the manager have skin in the game? Do they invest in the fund? And do you know what they're doing with those upfront fees?
Okay, some good suggestions there. And a major concern in private markets is liquidity. What sort of liquidity can people expect from commercial real estate debt? And how does it compare to other asset classes?
Yeah, it's a really good question, Laura, and it is one that's very topical at the moment. And investors should understand the liquidity in private credit because private credit is inherently an illiquid asset class. You earn a premium for being invested in private credit as compared to investments in public listed markets, and that is that illiquidity premium. However, a really well-structured vehicle can optimize liquidity for investors. And some of the ways that you could do this would be the fund could have, for example, a cash buffer. So cash, setting aside a certain percentage of the fund's NAV as cash buffer to meet any redemptions. A second way could be to look at really low average weighted duration loans, which means the loans are repaying frequently, which provides a natural liquidity to the fund. Or lastly, diversification is a strong supporter to liquidity as well. Because if there is ever an issue on a loan, it can be minimised and the contagion impact sort of managed. There are many funds at the moment that now offer monthly liquidity. So open-ended evergreen funds are really popular in this space and a growing innovation. So the MaxCap Investment Trust is monthly liquid. However, investors should be aware that if it is in the best interest of investors, if we're in a time of stress, then redemptions could be paused or gated. So if investors really need certainty and short-term access to their capital, they should probably think hard about whether private credit is best suited to them.
Cool, lots of considerations there. Yeah, thanks so much for coming on today. It's been lots of interesting commentary.
Thanks for having me, Laura. It's been a great discussion.
You've been watching Haley Devine, Head of Wealth Management at MaxCap Group. Thanks for watching The Manager Mix.